This segment is brought to you by Bursa Malaysia. I mean, this year. So what we do at Equity Tracker is normally every year we do partake with Bursa Malaysia to educate the public about investing, right? And since the start of MCO, we were not allowed to run any physical events. So this is part of the initiative as well. We are very happy to be working alongside Bursa Malaysia to educate more and more investors, especially in very, very hot markets, or what they call kangaroo markets today, right? So this is an initiative that which is proudly sponsored and brought to you by Bursa Malaysia.
Right. Yeah, we also want to thank Bursa Malaysia for this opportunity for hosting these sessions for them. And we hope that we are able to deliver what is promised. And we hope that you guys, after the end of these sessions, will be able to be a well-informed investor. All right. So without further ado, we're going to start off with a presentation. Like I said earlier, if you have any questions, just ask on the comment section so that we can answer them. All right. If the question needs to be answered urgently, we will answer them urgently as well if you follow the slides. All right. So as usual, please be informed that whatever that is being discussed here or being mentioned or being whatever that we are sharing, they are informational and educational purposes. All right. It's not intended as any investment advice. So if you need an investment advice, please do consult to a professional licensed investment advisor. Okay, so the presentation, Alvin is going to start with the presentation first. So while he's presenting, please do ask the questions. All right, so Alvin, over to you.
Thank you. Thank you, Benny. So tonight's session is going to be all new material. So even if you've been you've been watching this show quite often, this is brand new material that I have. Of course, this is introductory at this point in time, and don't worry about the slides because you can actually download it later either from Bursa Malaysia. We will actually share with you guys the link how you can actually download these slides as well. All right. Okay. So today it's gonna be myself and Benny. So we're gonna be talking about being data-driven investing, or what is data-driven investing, right? And we're showing this in a new perspective. Of course, Benny will be covering one part of it, which is the price chart portion. There are a couple of two new things that I will be sharing today. Will be economics, okay, especially in times like this. Economics, it's quite important, and also how economics actually affect your stock prices eventually. Okay, and I'm also going to be talking at the end or the second half of this session. Is something going to be quite interesting, which is the first time I'm going to talk about. Is actually we're going to talk about industry metrics, apart from financial statements and just prices. What kind of other data can you actually get to make better informed investing decisions? All right. So why being data driven, right? What is the whole purpose of being data driven? If you're not data driven, then you are going by gut feel, what they call gut feel, right? I think it feels right, or my friend says that he knows someone who knows someone that this stock will go up, therefore I'm going to invest, right? Or some people use the word play the stock market, right? Play, right? So you don't play the stock market, you invest in the stock market, okay? So please don't do that, okay? And the whole point about being data driven is that it actually streamlines and actually helps you narrow down, right? Because every time you decide to buy and sell, if it's going to be very much on gut feel, there is no consistency, or what I call predictability, right? So when you are being data driven, effectively what happens is that you now have a basis. Okay, I call it a basis. So it's a base, right? When you make decisions, the whole idea about investing is that you want to increase your probability of being right more often than you are wrong. Okay, I don't believe in investing you can always be 100% right. However, in investing, it is possible to be 100% wrong, okay? Not the other way around. So really the whole point here is that what is your basis before you decide to invest or not invest in a stock, right? And I talk about being gut feel, being unpredictable, and it's also uncertain because it's not being data driven, right? And and the whole idea why we want to use data at the end of the day, okay? Just remember when we talk about buying and selling shares, okay? If you are buying or you are selling, only one person on one side will be right, okay? Both of you guys can't be right, okay? So the whole point we use data. I'm a big fan of using data, right? As you know, as equity tracker, we've been collecting data for the last 40 years, right? So data driven investing is very much in my blood, or what I do, right? But what I think most people, when we talk about being data driven, usually we focus on fundamentals, or they call fundamental analysis, right? Where we're only talking about accounting numbers, right? Today, yes, now accounting numbers are important, but today I'm not going to spend so much time talking about that. I want to talk to you about the other numbers that actually affect your accounting numbers. All right. So let's hope after this session, I get to change your mind about what being data driven investing is about, and how you can become better data driven investor. All right. So if you are already a data driven investor, what I hope to do is actually improve that scope of data that you use. Okay. And a lot of these topics that today's session I want to talk about actually is got to do with the questions that I always get asked, right? As a trainer or as a presenter, what, how, why, right? And I hope I can put this into context. So in the next 1 hour, it's a very short time. It's very easy to digest. I put it in a very easy to digest format, right? How you can become even better, right? So even if you are a data-driven investor, this will help you significantly. All right. Now, when we talk about indicators, so if you talk about PE ratio, or in the case for Benny, it would be things like RSI or moving averages. These are all, or dividend yield, or dividend payout, or net profit margins, right? All these are what I call, generally in very loose terms, I call them indicators. Okay, and to get to these numbers or indicators, they have to be data driven. So, for example, if you're talking about PE ratio, you need a price number. You also need an earnings per share number. If you talk about dividend yield, you need a dividend per share number. You also need a price number, right? In the case of using moving averages, you also need to know in terms of what is the price of that stock. So you have to get data to get indicators, right? But if you purely look at data by itself, and I think this is quite common. You can go and Google this. This is actually a business management metric. They call them, there are leading indicators and there are lagging indicators. Okay. Now, what are leading indicators? Are things that will help you predict a little bit better in forward the future, right? Those are leading indicators. Lagging indicators are the ones that have already happened, and therefore this is the result. Okay, so let me give you an example, right? Let me give you an example, and later I do have some numbers to show you. If you talk about let's say we have let's talk about a restaurant, okay? And we think we look at this like this, right? So you realize that whenever there is good weather, right, a lot of people will go to a restaurant to eat, right? So a lagging indicator, you calculate, say, hey, how many people did I serve tonight? What is my cash I took in today? What is my profit that I made today? Okay, that is a lagging indicator. A leading indicator is if you look at the weather forecast and you plot out for the whole month, if every day, maybe 3 out of 5 days or 5 out of 6, 7 days, it's going to be raining, in effect that you have to do something to prepare, right? So you're saying, look, if I look at the forecast of rain, right, and it's going to be monsoon season, for example, which is very common in Malaysia, maybe then I should prepare myself to have more delivery riders on call, and to promote a little bit more about my restaurant and get people to call in, or set up a website where people can order in. So that's the difference between a leading and a lagging indicator. Lagging already happened. Leading is to help you make a bit more informed investing decisions, right? Okay. Now, of course, in investing, the most difficult thing is actually to get leading indicators. Because as a stock market is actually open and transparent, so whatever major information that needs to be disclosed actually needs to be disclosed. All right, so I'll talk to you about where you can get some leading indicators and where you can get some lagging indicators. Right now, the issue about leading indicators is that sometimes not all companies have it, sometimes not all industries have it, so they are more difficult to attain. But and it also requires you a little bit more analysis skills, right? To actually to connect the dots, right? So if I say, look, if rain is bad today, therefore I need more riders, therefore I need to create a website, and then I need to check out how much I advertise online as well, right? Just an example. I just want to give you guys an example of our restaurant, right? Very simple. And I explained to you what lagging is. It's already happened, okay? And if leading indicators are correct and you get them right, they are almost like your crystal ball. You can almost predict what's going to happen to the lagging indicators. Okay. Now, sometimes the stock market behaves when sometimes the stock market may use leading indicators. Sometimes stock markets also use lagging indicators, right? So, for example, you always see quarterly season, right? When financial numbers are announced. You always see where is it going to go up, come down, and therefore after it's announced, then you'll see whether the price will go up or come down. That's because price can be quite reactive to what I call lagging indicators, which is a financial numbers are known as lagging indicators. All right. So what are the data points that we're going to be discussing today? Okay. There's going to be four points that we want to have a chat about. First one is economics. Okay. Second one is accounting, or what I call fundamental. Most of you guys call fundamental analysis. Third one is price chart, which Benny will talk about how you can use data in a price chart to actually help you become a more informed investor. And the last one is actually business and industry metrics. So the last one actually leads up to the second one, which is the accounting and the fundamental, right? I'm not sure how many of you guys here can still remember, if I can get you guys to comment in the section below, how many of you guys can still remember learning economics in school or in high school or in university, right? If you can still remember, type economics in the section below, because when I say economics, I don't mean home economics. Home economics is very different from economics, right? Home economics is about cooking and baking and things like that, right? Pure economics, right? So any of you guys who are very familiar with economics, you can also type it down at the bottom, right? Just like to see where you guys are at. Now, understand that the general concept about economics is this, right? It is, so if you think about economics, it actually starts off with a very big picture, and then your accounting and fundamentals go smaller, right? And we talk about price, it goes smaller, and it go about business metrics, it goes smaller. So it's almost like a inverted triangle, right? So economics is very big. So when economists do estimates, they might be off by billions. Okay, I just want to give you an idea. Okay, if you talk about accuracy, right? When you do accounting, you have to be right, lah. Okay, maybe I put into thousands, all right. I guess if you talk about price chart, it is always accurate. It has to be up to that decimal point, whatever you're trading. Business metrics then widen a little bit in terms of accuracy. It is a plus minus thing, right? So I just want to give you guys some context into how detailed we're talking about. Okay, so I have a few guys here that I have a few of you guys here that actually do remember your economics. Okay, well done, congratulations.
Yeah, I only remember the demand and supply. That's one. Price equilibrium and GDP.
So economics is a very broad subject. Actually, my first degree before I did accounting and finance, actually I switched. Actually, I did a bachelor in economics, right? I do like it, but at that point, I can tell you it is so abstract. But really, after being in the market for a while, you try to figure out how they all link up together. Yeah. Now, so I'm going to show you guys what I mean. Okay, economic data is very much a lagging indicator. Okay, accounting is also very much a lagging indicator. Price charts, okay, unless it's live. If you talk about end of day price charts, it's already happened, so it is lagging. Okay. Business or industry metrics, I call them, are actually what I call leading indicators. Okay, so we're going to go through all the easy stuff first. And what I hope to share with you guys is the relationship between the stocks that you buy, between economics and accounting, price. Benny's going to cover the price. And also the last part is industry metrics. All right. So now, so I'm going to look at, so what happens when you look at some of these indicators, okay? Now, when you look at economic data, you don't want to look at it so much in a short-term perspective. You're actually looking for the longer-term trend, okay? It's a longer-term thing, okay? You also, if you talk about accounting, it's very much short-term, like what's its quarterlies, but you can also use it as long-term. But remember, accounting is purely historical, right? It's quarterly numbers, historical numbers, audited numbers are all historical. Price chart, I'm going to let Benny sort of chime in on this. My perspective, I think price chart, it could be for short term. It could also have, you can look at the price chart in the longer term space. I don't know, Benny, would you agree with that?
Yeah, I think you can do both. You can use price charts in every single second. You can use on every single day or weekly or monthly. So it really depends on your objective in investing and trading. Yeah.
Yeah. So maybe like looking at a long-term price trend or long-term, short-term price trend, right? As an example, right?
Yeah, that's correct. That's correct.
Okay. Okay, so so I can see some of you guys law of diminishing returns are very interesting. Compared to durians, right? Okay, it is durian season after all. All right, so so let's move on. Okay, now I'm going to talk about economic data, and it's really because it's an introductory session. It is going to be very sort of simple and straightforward. And I have about five items for you. These are generally what they call macroeconomics. So there's microeconomics and there's macroeconomics. So when some of you guys put in SS and DD, that is micro. These indicators I'm looking at. So remember these numbers, if you look at the estimates, some of them are actually estimates. And they could be off by billions, okay? So these are just estimates, right? Because they deal with such large numbers. All right, so let's see where we go. All right, so I'm going to show you guys very simple. This is known as GDP, right? So the first item here I'm going to talk about, this one talks about gross domestic product. Okay, what is gross domestic product, right? It is, when I first saw this term, it looked pretty alien to me, right? What is gross? Why is it domestic versus what, international, right? And product. So why is it a product? So is it really a product, right? I guess for lack of a better word, really what GDP tries to do is measure all the goods and services produced in your economy over a period of time. So normally, if you notice, they talk about GDP figures, right? GDP, they release it every quarter, right? And then also you add it all quarters, you get a full year GDP, right? And that's a measure of how big or how small your economy is. It's also a measure of whether your economy is growing or not growing. Okay, so all countries aspire to grow their GDP. All countries, all right. And GDP is just a general number. So normally what they do is they also do GDP per capita. That means GDP based on the number of human beings you have, your population in your country. Okay, so that's why there's a difference between GDP and GDP per capita. Per capita is just based on per person. Okay, and as of course Malaysia, we are trying to go into a high income economy, right? High income economy is the definition is minimum, I think, $12,000 GDP per capita. Okay, so we were actually very close to it. Then our forex weakened, and then we came down a little bit. I think our GDP per capita is probably about 8 to 10,000 or 8 to 9,000 currently. But again, as I said, economics, right? We rounded off. It can be off by a few billion. Okay. So I'm going to So Betty, you have something?
No, sorry, you on.
Okay. Yeah, I think someone mentioned should be gross domestic product and services, right? But I guess it sounds weird if it's GDPS. So I guess everyone's so used to GDP, right?
Sounds better, I think.
Say again.
It sounds better, lah. Three alphabets. GDP.
Three alphabets sound better than 4 alphabets, right? Yeah. Okay. So I'm going to just give you guys. I'll circle back to this slide again because there's no point I explain everything and then I'll show you guys. But I'll do sort of very quickly one by one. So this is what GDP looks like. So this public data. It's actually collated by the World Bank. Google has done a terrific job. So if you want to Google any country in terms of GDP, you can do that. Okay. Now this is GDP in nominal terms. Okay. I don't want to confuse all that, but it's just a big number, all right. So I give you guys an idea of what we mean by GDP. Now this is actually up to only 2018 that I have here. It is from 1960 to 2018. Okay. If you look at Malaysia's GDP, we are 300 and slightly below 350 billion. I'm not sure if you guys can see, but I'm going to read out the lines to you. Okay, the red line is Philippines, the blue line is Malaysia, and the orange line or yellow line is actually Singapore. Okay, now so whenever you see a dip like this, right? Okay, this is known as a recession. Okay, just because you're in recession doesn't mean that you produce zero goods and services. It just means that there is negative growth, all right, or your total goods and services in your economy has actually shrunk. Okay, for the you want the exact definition of GDP, you can actually Google it. But very quickly, it's consumption or consumption expenditure plus your investment plus your government spending and then plus your net of exports. That is the actual definition of GDP. All right. So that means exports minus imports. Okay, so if you look at a very big picture, a very, very big picture, why do you want to look at GDP? Because you see a lot of people want to invest in stocks and they ask, or where should I put my money, right? My point is very simple. I said, look, I think in the next 10 to 20 years, Asia is going to be a very important place for investors because why? We are all developing nations. So if we talk about ASEAN, for example, we're all developing nations, which means that we are starting from a much lower number, and growth is what I said. There is higher possibility of growth, okay, in the future, the next 20, 30 years, right? Just to give you an idea, right? So for Malaysia to go from about 100 billion US to 350 billion US, it's 3.5 times. Okay, just to give you an idea, right? So when you're starting from a low base, your growth is much bigger. All right. So if you're deciding where you want to put your money, one of the big picture questions you want to look at is, let's look at the GDP. What is the trend looking like, right? You don't want a GDP trend to be flat. You also don't want it to be downwards. So it's almost like price charts are almost okay. You want to make sure it's going up, right? Because otherwise, if you're investing in a country, that is the wind behind your back, right? To guide your boat forward. Yeah.
Yeah, so it's a big figure, right? So that's why it's I mean, it doesn't change as volatile as stock markets or as stock prices, right? So it is important, like what Alvin say. If I'm an investor, any investor, I want to look at any country, I will have to look at growth, right? Because if there's no growth, then definitely, what can you invest in, right? So if you look at the general trend like this, like Alvin has said, I think ASEAN, especially ASEAN, right? The potential growth is going to be tremendous, there's a lot of room, like what Alvin mentioned. So yeah, I think Malaysia is also one of the best places to invest, but the only thing that how you want to find these opportunities, right? And this is where we wanna share with you guys in these sessions.
Yeah, because if you're going to be investing in a country where you got flat growth or you got negative growth, it is very difficult to find companies in there that you want them to grow because the economy is flat or shrinking or very largely developed. All right. But just to give you guys an idea, because this is GDP purely based on the actual absolute number, this is not based on per capita. Okay, so my next slide actually shows you this is Indonesia, just to give you a size of how big Indonesia is. Of course, there are 200 million people. You're looking at Indonesia's GDP is almost 3 times that of Malaysia. Okay, but that's because they're a much larger country, and they have a lot more people, right? But if you look at it on a GDP per capita, Singapore is number 1. Okay, so if you look at the growth rate for Indonesia, for example, because when I talk about lower base, right, if you look at it, in the same time frame, 1960, they were just shade below 200 billion. They grew about 5 times in this same period versus Malaysia, where we grew 3 times. So that's just to give you a perspective of what I mean by big picture. You want to make sure that everything is growing, right? Now let's look at other economies. Now, if I ask you guys, so the red line shows you Germany, the yellow line, the green line shows you United Kingdom, the yellow line actually shows you France, and the blue line actually shows you Italy. Okay, so if you look at them, what is the general trend that you see? This is during the same time, so I'm going to flip back and I'm going to flip forward. What's the general trend you see with these 4 economies? These are European economies, yeah. If you guys want to add to your comment section below, and you can actually see, right, what do you see difference between the first slide that I just shown you and the second slide is European countries, right? Do you notice that they are generally flatter, right? They've gone through that growth period. This is generally flatter. Now I show you. I've changed the timing a bit so I can zoom in and show you guys. So this is the last 15 years. There's almost 15 years of data on this side here. But in the last 10 years, you can see that it is quite stagnated or very flat line. Okay, so if you're investing in any of these economies, that is the general direction where they are. Okay, but they are very, very big economies. Okay, Germany is almost 4 trillion. Right, United Kingdom is 2.75 trillion. It is based on US dollars, right? France is also where we at? France is probably 2.5 trillion. Italy is about the size of South Korea in terms of gross domestic product. Yeah, okay. Now I'm going to show you the 2 giants in the world today. Number 1, number 2. All right. The blue line is obviously, if you cannot read the slides, it is obviously United States. Right on top there, they are at 21 trillion, just about 21 trillion as of 2018. All right. And this is China in the red color. Okay. Actually, I didn't pick the colors. Google picked the colors. Okay, but so happen it represents the color of the country as well. Okay. So just Chinese flag is red. If you're trying to figure out why the trade war was so severe in recent times, if you look, this price chart is from year 2000 to 2018. This GDP chart, sorry, year 2000 2018. You kind of try and wonder why Trump is so much against. I think if you read the news today, I think the Senate has passed a bill to actually vote out Chinese companies from US stock exchanges. China's growth rate has been immense. Not only has it been immense, on an absolute value, it in terms of size, they're big, right? But in terms of growth rate, they are also very fast for a big country. So if you look at them, they were just below 2 trillion 15 years ago. And the gap between them and the US was 8.5 times. That was the gap. You can see that these 2 parallel lines are now starting to close, right? As of 2018, the difference is only about 1.5 times. So US is only let me see, about 50% bigger than China at the moment, but on an absolute basis, but not on a GDP per capita. Okay. So you can imagine if we're talking about 20 years later, if this trajectory continues, you're going to see China overtake US as the largest economy in the world, right? So I just want to give you guys some context in terms of GDP. That's what we're talking about. All right. Of course, if you guys have questions, happy to post it on there. We may not answer it straight away, but maybe we'll leave it to Q&A. But if they're very pertinent to this, I'm happy to discuss it. All right. Now let me go back again. Second one is export data. Okay. Why is export data? So I started very big. I'm going to go smaller. Why is export data important? Export data tells you what kind of goods and services a country exports. Okay, now when you talk about exports, one of the central issues about being an exporter is this, right? That you must be globally competitive. Okay, which means that you can see companies that are very big in their own domestic market, but they cannot thrive in international markets. That's because they may not be able to compete. So exports is a very good measure to see how competitive your product can be on a global scale. That means you can compete globally. Okay. So if you look at export data, it's goods and produce that you sell overseas, right? So I'm going to just show you very quickly, since we're going to be talking about Malaysia. This is Malaysia's 2018 export data. Okay, I know some of the words are a bit small, but I wanted to give you context. Okay, now if you look at the blue portion, that has got very much got to do with electronics or semiconductors, or in this case you can see integrated circuits, which is 20.5%. Now this is pure exports. Okay, that means some of them are actually imported and then serviced and then re-exported out. Okay, now so in this case, if you're trying to build a portfolio in Malaysia, for example, and Malaysia is an export country, we've had continuously, I think, 40 or 60 months of trade surplus, right? That means we sell more than we buy, of course, until the recent corona or COVID-19. If you're trying to build a portfolio, I think the main perception is people always think that Malaysia is an oil and gas producing nation. Yes, we are an oil and gas producing nation, and a lot of government revenue comes from oil and gas, right? However, the economy itself, there is a large chunk of it in terms of export that is based around semiconductors, right? So if you go to Bursa Malaysia, you're going to find a lot of semiconductor industry companies that are listed. And just to give you an idea on the size, right? Because if you're investing in Malaysia, it'll be crazy not to even look at this sector, because it is the largest sector, right? In fact, it is multiple times bigger than palm oil. It's also multiple times bigger than oil and gas. Yeah, okay. You can just have a look, right? So again, this is OECD data. You can actually download it for free. This is all free data. I got this from oec.world, so you can go to the website. You can find for any country, right? But this is just a very big picture, and I remember I said this is estimates that can go off in billions. Okay. Now, I hope you guys it makes sense so far. So that's a bit about how you want to segmentize your portfolio. Okay. Now I'm going to come into getting down to the bottom of it, right? Let's talk about unemployment, right? Now unemployment, I don't know why, but economists have done the other way. Instead of saying that my employment rate is how many percent, they measure as how many people are not employed. Okay. Now generally, employment is based on how many people are able to work. Okay, so you got to minus out the retirees in your total population. You also got to minus out all the babies and the kids and school children. Okay, and they calculate out of the total population how many can work or is able to work, and how many are unemployed. That means they don't have a job. Okay, and they work it as a percentage. All right, they call this the labor force. Okay, so this is I managed to pull out. So all this data is actually available publicly, and you can actually get it. This is actually the unemployment rate for Malaysia in the last 19 years up to 2018. Okay, this Malaysia's unemployment rate, and you can see, if you can see, or you can download the slides later. If unemployment rate goes down, that is good. That means more people are being employed. Okay, why? Because this is a measure, an indicator into how healthy your economy is. Okay, just to give you guys an idea, right? So this is what we talk about unemployment rate. That means the lower your unemployment rate, the better it is for your country, right? Of course, you can see when business is not so good or economy is not doing so well, unemployment rates go back up. Okay, when things come, so it's an inverse versus what is good, what is bad, right? And you can see it's quite obvious in 2008, right? 2009, unemployment went up to almost 3.7%. Yeah, and of course, all economies work in cycles, and you can see unemployment rate has come down, right? So I mean, what is your guess? What do you think unemployment rate is going to be post COVID-19, right? Because everyone's on MCO. So if you look at this, what I did was, now remember all these numbers are lagging, right? So they don't, they come out every quarterly, and it's actually given out by the government. So you actually can go and Google it. You can find this. Really, I think the lowest Malaysia has ever gotten in terms of unemployment rate, like at its best year, is about 2.9 or 2.8%. Okay, just to give you an idea, right? So what I did was I took these numbers and I did a correlation with our Bursa Malaysia index. Okay, just want to show you. Okay, so I've picked out some points to give you an idea. Okay, this is the Bursa Malaysia index. So if you look at this, back in 2000, when unemployment rate was 3%, so our best year was 2.7, 2.8 lah, the best year lah. The market actually went up, of course, for multiple other reasons. Okay, in 2008, when unemployment rate went up. Now remember, these are all lagging indicators. That means only after the fact I can tell you this. All right. So if you look at this, it's at when unemployment rate was very high, 3.7%. You can see this is where the market was. When unemployment rate was at the lowest, 2.9%, I showed you. This is where the market is, and of course, at the 3.5%, this was where it was, right? So, so the December forecast for 2020, this is IMF forecast. And remember, forecast can be off by a few, well, I guess in this case, millions, probably a couple of million or a couple 100,000. This is an IMF forecast for December 2020. It's going to be 4.9%. All right, so you can sort of guess where the market will be heading. Of course, what this sort of tells you is that when unemployment rate is at the highest, that is where all your opportunities lie if you're going long. Okay, so don't wait until you get very low unemployment rates, then you say, that's the best time to buy stocks. Really, if you look at it on a macro scale, when it's worst is where your opportunities lie. All right, so let me go back again. Let's talk about interest rates. Okay, I think if you have a fixed deposit, then you know about interest rates, and you know that of recent it's been coming down, right? Now recent interest rates generally globally are set by the central bank of the country, right? And if we talk about interest rates, I'm going to show you guys where we are in terms. So this is the US interest rates most recently. I don't know, it is quite an interesting chart if you can see.
Waterfall.
Yeah, it's like a waterfall. It's a cliff, right? It's a cliff, right? And I want to explain to you why interest rates are important. So again, this is very general for some of you who are already experts at economics. I hope I don't bore you. For those who are new, this is probably new. I'm just trying to show you when they talk about these certain items, what is their correlation, right? So US interest rates are close to zero. I can't even read it anymore. It's somewhere here, okay? I think in Japan it has been negative. In Europe also they tried negative interest rates as well, which means that if you put money in the bank, you have to pay the bank to keep your money. Okay, now you put money in the bank pays you money to keep it. Okay, and lend it out, of course. This is Malaysia's interest rate. Of course, there's less data points, but you can see we are at very low levels currently. I think the lowest it's ever been was 2%, and that's really where we are today, 2%. Yeah. Now, what do central banks do when they put 2%, right? The whole idea here is that they want lower interest rates. They don't want people to put money into fixed deposit. They want people to spend the money. They want people to invest, continuously invest, because you can borrow at much lower interest rates, right? So the whole idea about lower interest rates is to discourage savings, right? And get more money velocity in the system, right? And they usually do this normally when there is a recession or there is or there's a contraction in the economy. Okay, so they're really trying to flush it with liquidity as much as possible, hopefully to restart your engine, restart your economic engine as quickly as possible, right? So they have a couple of tool sets they can do, right? They can change interest rates. The next thing I want to talk about is actually printing of money, okay, creating of money, right? So as an investor, why am I bullish about investing? Okay, I'm bullish about investing for just a very simple. So this is a very simple graph to show you. This is the total amount of money that is being created in ringgit terms, right? Again, this is from Bank Negara statistics, okay, and they actually show you how much money they create in ringgit terms every month actually. And you can see there is almost about 2 trillion ringgit floating around in the Malaysian system at the moment. Okay, and so they do two things: they keep interest rates low, they increase money supply. The whole idea is to jumpstart the economy. Of course, this is what if you talk about crypto is trying to go against this issue and saying, look, you keep creating money, it's going to be worthless, right? Now, there's two sides to the story. So it's normal and healthy for countries to create money. Why? Because as your GDP grows, you need more money supply to lubricate the economy as well. Okay. Now, so if you look at this, Malaysia has grown their money supply by about 2 times in the last, I'm trying to remember, is it 9 years or 10 years? Okay, so this graph is now 10 years, 2010 to 2020. Okay, if you look at the US, this is what US looks like currently. So what is interesting is that you will notice that the drop in interest rates, the waterfall. Of course, this is as of whatever latest data I have. So this is again a lagging indicator. They don't publish it. They only do it every month. So it's up to like first quarter of this year. But my guess is this number is going this way lah. It's going up lah. Okay, the reverse of your interest rate. Now, why is this important? It's important because if I look at this, it basically tells you a couple of things. We have low interest rates and a lot of money being created. There is bound to be devaluation in the money that you hold today. That means the money you put in the FD today, if you keep it there and they keep creating money, your what they call PPP, purchasing power parity, will come down. Okay, which just simply means you can buy less with the money you have in the future today. Okay, I know it sounds very complicated, but you basically just buy less. It's all about inflation, right? Now, so why do I like to buy stocks, or why do I like to invest? It's because of this. This is another thing in the works that actually is wind behind your back. So if you have an economy that is growing, obviously they need to create money supply. And low interest rates environment is the best time to invest, not to save. Actually, it's the other way around. Okay. Now, when I say save, I don't mean you have money sitting there for emergency funds. That's not what I'm saying. I'm saying money you don't need for the next 10 years. You must invest it. So these are the factors that will push you, which means that if you look at property prices, asset prices, all of them have gone up, largely because of the increased money supply, right? And how much money you increase your money supply will also determine your foreign exchange rate in comparison to other currencies, right? So I just hope this is a very short 20-25 minute session about economics, really to show you how it all links up together, right? And why I'm always very bullish on stocks, right? I always have been very bullish on stocks. As in the very longer term trend about stocks is that asset prices will go up over time if this continues. If this continues again, okay. So I just wonder if this continues going forward, and if you look at the trend. Remember, I talked about long term trend. What do you think the long term trend about printing money? It's gonna keep going up, right? It doesn't look like it's gonna come down, right? And interest rates, if they keep it low for a long time, really that's not going to be good for savers, right? If you're a saver. Right, so really this is just a very quick intro. Of course, if you guys have any question at the bottom, you guys please come through it, but it's very basic. Maybe I'll go through. Benny, you want to go through your part first, and then I'll come back again and cover the last two.
I think we'll try to answer some questions first on this topic before we go next, right? So there are quite a number of questions that come in, so maybe we'll just want to look at them first, right? Because I'm going to bring the questions up on screen. Like CH Ang here, right, mentioned that GDP in 2018 about, I think it means about 6%, but many corporate profits on downtrend. Why is there a disconnect?
Yeah, so you see, remember I said that it was a estimate number, right? A very general estimate number. You actually have to dig a bit deeper into which parts of the economy actually did better. Was it exports, or was it, because in Malaysia, if we talk about Malaysian GDP, it's a big chunk of it is actually based on consumer spending, okay, or consumption based, okay. And if you look at the last, if you correlate GDP consumption spending against household debt, you're gonna see that they move in tandem, right? My take was that a bulk of the consumer part was actually dampened in 2018, largely because of course household debt has kind of maybe reached its limits, and it was a bit debt filled in that sense, right? So another big component, normally if you look at recessions like what we're going through today, a technical recession, government will try and push the GDP up, right, through government spending. So you're going to see a lot of infrastructure projects that happen, right? So I cannot remember why 2018, but you need to go and dig further which were the elements that pushed it up to grow at 6%. Yeah.
Yeah, I guess because this is also a lagging indicator, right? So when the data comes up, probably the market has already picked out, and then when the data comes in, it looks good, but the markets start to come down. So that's one reason why a lot of people say that the stock market normally leads the economy about 6 to 9 months, right? I don't know if that figure is correct or not, but normally it leads because the market is more sensitive to the current situation, not like the economic data. All right, so we have another question here. This is from DT Kwe. There's a GDP per capita should be more accurate, IMO, but seems Luxembourg. So he's looking at Luxembourg, which is heavy. I mean, Luxembourg has very high GDP per capita, but he has very less influence in the world economy compared to US and China. Mind to comment?
Yeah, because if you're a rich country and you have very little people, your GDP per capita will be very high, right? But so in a certain extent, size does matter, lah. So if you have if you are population of 2 million and you make a lot in terms of GDP per capita, you might be ranked on top. But size does matter, and of course, if you look at size does matter, it's just not the size of the economy. I think economies today compete on a few different, or countries today compete on a few different aspects, right? One of them, let's say, is research and technology, size of your military, your education system, right? So that sort of kind of couples together. So in a sense, why China and I mean, if you look at a GDP per capita for US and China, US beats it, right? Because US has 300 million people, China has over 1 billion people, right? But by sheer size, they will become the largest economy in the world, looking at the trajectory, right? So if you're a business person, or something really, or if you're related, you're in a job, and obviously your company will buy and sell things, right? People will want to be naturally attracted to something that's big, right? Which means that when you are a very large economy, you have a lot of sort of supply chain sort of everywhere, right? Because you can't just be self-sufficient. There'll be a lot of trade that happens, right? And that's why a lot of people do also want to trade with China, right? Or sell to the US, for example. So that's really the whole idea behind it. That's why I talk about GDP and not so much GDP per capita, right? Size does matter, lah.
Okay, we've got another question here from Tan Seong Kok. If people borrow money to invest due to interest rate, will it impact banking system because of bad debt?
It will only impact banking system if they cannot pay back the loans. Okay. That's a very short answer, and really, if you think about the loan moratorium that we're having in Malaysia today for 6 months, I in my opinion, I think it helped the banks a lot more than it helped the average guy on the street, because it really prevented a lot of banks from reporting non-performing loans, right? Of course, low interest rates sustained for a very long time can be dangerous because your economy can overheat. So if you remember back to 1997, interest rates were 9 to 10%. Okay, and the economy was still going very high, right? So there are consequences around it. Yeah. Okay. So just to give you an idea, right? So yeah, It will only impact banking if they're unable to pay their debts. Therefore, if your GDP shrinks or there's massive unemployment, right? So that would be an issue. Yeah.
Okay, I got one more last question, which is quite interesting. Because a lot of funds are big funds, especially they have a lot of money in investment in money markets, right? I mean, they have a portfolio of money markets, stock markets, and other investment asset classes. But I believe money markets, like even fixed deposits and some other instruments like bonds and all that, right? Which are affected by interest rates, right? So I find this quite interesting because again, Tan Siong Kok asks, should we sell unit trust or withdraw EPF or other savings to invest in stock in low rate interest environment?
Okay, it's a very sensitive question because I'm not licensed to give you investment advice. Think about interest rates like this, right? In 1996-97, when interest rates were 8, 9, 10%, what were most people doing? Investing in stocks, right? Borrowing at crazy prices, right? Where they should have actually been saving their money in banks because 10% was big, right? And that's where emotion comes to them, right? The same thing happened in 2008. Interest rates were at an all-time low. A lot of people sold their shares to move it back into fixed deposits, right? And I think at the lowest it hit was 1.75%. Today we are in the same kind of we are I want to draw similarities, right? So I hope by drawing that similarity you can figure out what you may want to do. Okay.
All right. I think we go on with the next one, and we'll answer the rest of the other questions. So just keep the questions coming, and we'll try to answer them. We try to answer them because our session is going to run until 9:30 p.m. So we still have another half an hour. All right. So we're gonna do what now? Price chart, is it?
Yep. Oh yeah, Benny.
All right.
You want to share your screen or you want to use my screen?
Okay, I mean, since you're already on, maybe just go through it because there's only a few slides. I'm just gonna give you a broad overview what price charts is all about, right?
Okay.
Basically, price chart is also information, is also data, right? And these are data that you can't change. One is being transacted in a market, it will be plotted on the chart. All this data cannot be changed. So we basically use data, and most people use price data to make timing or to do the right timing to buy and sell, right? Whether it's in the short term or for the long term. So earlier, Alvin explained about looking at the big picture, economic data, which actually will affect markets in the long term, right? Not only just economic data, I think like economic policies for every country is also very important, right? So that will basically show you where the direction of the economy is going. Now, there, of course, we talk about later we're going to talk about fundamental data and also business metrics. But here I'm going to just share with you about price charts, right? So let's go to the next one and take a look at it, right? So generally, markets, like Alvin said, as long as the GDP keeps on growing, right, markets will continue to grow, right? Stock markets will continue to grow. I mean, you don't see KLCI or the FBM KLCI, when it goes low, but after that it goes into a new high, right? And the thing is that it never go back to the previous low, right? And it keeps on getting higher. Why? Because economy is growing, business is growing, and of course profits grow as well for corporations, right? So in the long term, markets do go up. It moves into trends, and of course, if the economy keeps on growing, the trend will be up, right? It continue to go up, lah. But in the short term, there is volatility, right? Because the stock market is not just a one straight line, right? They tend to be speculations as well. So the price can go high, the price can come down. In the short term, there is volatility. So a lot of people want to take advantage of this volatility, right? And because it is short term, we cannot use two lagging indicators like economic data, right? Or even let's say fundamentals is a little bit lagging as well. Because price, if you look at price right now, if you are looking at price when the market opens, it keeps on moving. So it's very fast, right? It is not really leading in a sense because it is still historical, right? But what we want to do is at least it provides a faster indication to at least know where are the short-term trends are to make to make decisions so that they can benefit or they can improve their investment or their investments or their portfolio, right? Like for example here, right? So I'm just giving you an idea what price chart can do. Basically the idea is to improve the profitability. Now, for example, over here, if you buy and hold a share for a long term, for example, right, from 1 ringgit to 2 ringgit, in the long term, maybe let's say 5 years, right? So you make 100% returns, right? Fantastic. Now, but if you are able to, let's say, trade in a short-term volatility, or at least try to identify them, if let's say you buy in a short-term trend, the blue line that you see on the chart, right, where you can buy at 1 ringgit and sell at 140, and then buy at 1 ringgit and sell at 160, and then buy at 130 and sell at 220. If you add them all up, it's going to be more than that buy and hold. All right. But it's always a challenge, because it's so, I mean, it's not really easy to determine where the low prices and the high prices are, right? And in fact, nobody can actually tell you where the low is and where the high is in the short term. But we use technical analysis to at least, write on these small trends. Or if they don't want to write on the small trends, they can even write on the big trend, the red line that you see. So it really depends, right, on that trader or investor themselves, what is their investment horizon or their trading horizon. Are they looking at short-term trading? They're looking at long-term. We also have intraday traders, right, who actually buy and sell within the same day. So these are the people who will be looking at live charts. The charts keep moving every day, and they'll try to identify where the lows and the highs are, and then they'll trade within the same day itself. So the market has many different kind of players, right, and they use different information. So price charts, again, you can use it for long term. You can use it to complement with your investing, long-term investments, to improve your investment portfolio returns. Or you can use it just for trading purposes. That means buy low, sell high, buy low, sell high. Whether in the long term, it can be like 1 year, it can be 1 month, or it can even be intraday, right? Now the other thing about intraday trading, if you can go to the next slide, Alvin, thanks, is that even if the market is in a downtrend, there are still opportunities for us to trade in a downtrend, because in the short-term trend, there are also uptrends and downtrends, although the long-term trend is down, right? So that's just one other benefit, that if you're able to use price charts, then you should be able to identify some of these, right? So today we are just going to run through the surface about economy, about price and chart analysis and fundamental analysis. Remember, I told you earlier that we're going to have a series of 10 sessions. All right, so this is where we're going to focus on the others later on. Okay. So the idea, basically, price chart is all about timing, right? So I'm just going to give you an example on the next chart. Alvin, yeah. Okay, here, for example, what we are looking now is all historical, right? Even when we look at economic data, or even when we look at fundamental data, they are all historical. That's why Alvin said they are lagging indicators, right? But the thing about lagging indicators is sometimes we try to build leading indicators out of lagging indicators. This is where we try to forecast, right? Like, for example, if the company has been paying dividends for the past 20 years non-stop, now do you think that next year they will pay dividends? Most likely, right? Because for the past 20 years, probably they have gone through many different crises as well. They have gone through many different growth, but they continue to pay dividend. So there are certain predictability looking at information like this, right? Lagging indicators. So price chart is the same thing, right? Everybody, when they start to look at price chart, they always try to identify where is the bottom and where is the top, right? And like I said, it's very difficult to really identify the top and the bottoms all the time, most of the time. But you know what? Actually, some historical data will also give you certain predictability in the future, even though in price charts, right? I just mentioned to you about dividends and profitability of the company and so on. So price charts. So what we in technical analysis or price chart analysis, we try to identify the previous movements and see whether these movements here is able to be repeated in the future, right? But of course, it's not 100% lah, right? But because it's the price movement is like a sum of market psychology, right? A sum of buyers and sellers and what they're thinking. So the patterns repeat frequently. Like, for example, that you see on the chart here, on the left-hand chart, that was in 2007, right? And there's a pattern called head and shoulders. Like I said, we're going to explain all this later in our later sessions, right? And then the market, when it bottomed out in 2008, 2009, there was a double bottom, right? Which basically means the market is bottom out. And then you see that this pattern occurs frequently, all right, even though towards the future, right? So we want to try to identify this pattern so that when we see these patterns again in the future, we would have certain expectations on the outcome. All right. So that is basically what technical analysis is all about. And again, this is based on data as well, right? It's not the gut feeling, or it's not the news or rumors that we hear, but these are all prices that are being transacted in the market. All right. So bear with us. So keep joining us in our session so that we were going to explain this in more details, right? Okay, so over back to you, Alvin.
Okay, so the next segment, I hope you guys are still awake. I hope I didn't bore anyone with economics. Thanks, Benny. So I'm actually going to combine both the fundamentals and also what I call trending data to give you guys an idea what you would look out for. Do stay to the end. There is this fresh analysis that I just did, so this might be something interesting for you guys. Okay. So previously we talked about here, when we talk about counting data, and I'm not so keen to talk about counting data in this session here, because I'm going to talk about what I call a leading indicator that leads to this lagging indicator, right? So very common accounting data is things like revenue, net profit, operating cash flow, free cash flow, and dividends, right? So this is something that I've always been talking about, and if you guys want to look up the definitions, you can. Okay, but these numbers again are lagging indicators. Okay, so let's look at some of the leading indicators. All right. Of course, I cannot go through every single industry. I've picked a few to share with you guys. Probably leave you some clues or to leave you some sort of an idea or clue how you can actually do this yourself as well. So the whole idea here is, can you find leading indicators in your stock that you're looking for? Okay, this is very, very important. They are not easy to find. I must warn you, they are not easy to find. The easy to find ones, everyone would have analyzed it and done to death. Okay, it is the harder one that you can find is where the gems really lie, the leading indicators. All right. So let me share with you some examples. So in this case, I'm going to share with you some simple ones. I know it's actually around. It's going to be. I'm going to be talking about people, right? I'm going to be talking about travel. I'm going to share with you a little bit of what I mean by leading indicators. Okay. Now these are not accounting numbers. Okay, please mind you, they are not accounting. So you don't have to be an accountant to understand these numbers. Okay. This is not price numbers either. So you don't need to look at any price charts to look at this. This is also not any economic data as well. All right. Really, when I'm trying to look for this, is if you can find. These are some examples of leading indicators, but you can find with these indicators, are there other leading indicators? So you could actually have a few leading indicators within the industry. So in this case, I'm going to share with you guys very quickly a couple of case studies to just leave you a feel for it. Okay. Now, I'm going to talk about Asia. Asia is a stock that I've covered since it was listed in 2004. So it's been now 16 years now. Now, if you look at Asia, one of the things that I did like about Asia was that their disclosure numbers were very good. When I say disclosure numbers, I mean not their financial numbers. Okay, if you say your company's audited numbers are good, there's nothing to be good. That is the standard. You must be good. Okay, disclosure must be there. But what they have actually provided is over and beyond what most companies did at that point in time. Right now, it's getting more and more popular, but very few companies actually publish this metric. So actually, I pulled it out from the website. If you guys can see. Now, if you can't see here, I'll just sort of highlight it. They actually show you every quarterly, even before they announce their quarterly results, they actually will show you how many passengers they carried and also what is the capacity, because they kept adding more and more planes, they kept adding more and more capacity. So for every stage that they do, that means if let's say today they fly to Singapore on one plane, and it fits 188 people in that plane, that is the capacity for that plane, right? So they want to figure out how many seats they were able to fill. So that is known as load factor. Now, if you look at this has got nothing to do with accounting numbers, right? So they actually show you every quarter, but in this case, it's annualized for just for simplicity. They show you how many passengers were carried. So 22 million, 24 million, 26 million, 39 million, 44 million, right? So you can almost see the trajectory going up, right? But what you must also look at is that you must look at the capacity. Has the capacity grew, right? So you can see that capacity has also grown. They've also improved their load factor. That means if you look at 85, 87, 88, 85, which means that they were able to sell 85 or 88% of the seats that they had, right? And that is the key for low cost travel, right? You want to do a quick turnaround, and you want to have as many short flights and very high capacity, so you can fully utilize your plane. Of course, due to COVID, I think a lot of airlines today are suffering. It is a bit of a black swan. But I wanted to show you, if you look at behind these numbers will come first before your revenue and your net profit will come. Okay, and what you're trying to do is, when I said long term, is that you want to try and look at the longer term trend of these numbers. Okay, later, actually, my last slide actually talks about other industries that what metrics you can actually use. Okay, now, so if you look at this, their passenger grew about 2 times, but the capacity grew at 1.8 times, which means that their load factor actually improved, right? And you can see how they also increased their aircraft utilization hours per day. So very few companies publish these numbers, but they are very much welcome for investors like us, right? So 12.3, 12.4, 12.6 up to 2018 was 13.3 hours. I think that's the max they will allow. Okay, and how many stages? So all this is extra data, but just purely looking at the numbers, if number of passengers go up and number of capacity goes up and their load factor goes up, you can almost say that, look, their revenue is going to be up for sure, right? The whole question is, can they actually make a profit from all this? And this is where you need to go and study a little bit more about airlines. So in the case of airlines, 50% of their cost is fuel costs, right? So you need to keep an eye out on their hedging. You also need to keep an eye out for Forex. You also need to keep an eye out for crude oil prices, okay, as an example for profit. So if you look at this, these are really long-term trends. Like, even if you miss a quarter, it shouldn't matter, right? Because you want to know, if you buy this stock, is there growth in this space? That's the whole idea. Is this company growing? And these are what I call leading indicators. Okay. So what has happened in that same time period? I know it's swapped the other way around, but you can see their revenue went from 5 billion to 10 billion in that same period. Their profit went from, of course, when I talk about profitability, it can be up and down due to their cost structure. But in 2014 was 82 million. It became 1.9 billion. So it grew about 23 times, right? So net profit is a bit something to do with question mark, but you can almost see that the trajectory that they're in, it is on an upward trend, right? So actually, if you read this book, I'm trying to remember what's the book called. Let me remember. They call it the hedgehog, right? So the whole idea here is that, have you found a company that has a business model that can grow and that can scale, right? And the whole idea about the hedgehog concept, you can Google it, right? Is that if they actually found that and their flywheel is spinning, and you want to use some of these historical trends, that means it says that their business model is proven, that if they keep adding capacity, it seems that they can keep selling more seats, okay? And the number of passengers keep growing, okay? So that's the whole idea that you want to look for. So even if you miss them out very early on, that's okay. You want to know what is their long-term trajectory going to look like, okay? And this is where, before you look at passenger growth, you can also look at tourist arrivals. That's another leading indicator. You want to look at tourist arrivals in whatever country that they serve, right? What kind of trend is that happening, right? Is it plateauing? Is it growing? Or is it declining? That's the whole idea where you want to look at, right? It's always easier to invest in a company that is in a growing industry. The industry is growing, right? Of course, it's just easier. That means if you make mistakes, they're a bit more forgiving, okay? Then if you want to go in an industry where the numbers are declining, you got to be a lot more specific, right? So I give you an example. Last month we ran a yes, thank you, Peter. Good to Great by Jim Collins. Yes. If you look at I lost my train of thought. If you look at hard disk sector, you look at the hard disk sector in the last 6 to 7 years is on a decline. Okay, it's coming down. But can you still make money from companies in the hard disk sector? Actually, you can, right? Some of them can buck the trend, but you need to be a lot more diligent in understanding the business they're in, okay? But if you're generally in a sector that's growing, I'm saying that, it's a little bit more forgiving, but I'm not saying that you won't lose money, but it's a little bit more forgiving. Now, so I charted the price chart of AirAsia just to give you guys an idea. Against the green line here, which is the number of passengers that they actually grew, right? So you can see 28, 30, 44, 52 passengers, right? This is against its price chart. So I call these numbers leading indicators. Of course, 28 million passengers was 2014. If you go back all the way to 2008, it was even less, a lot less. Okay, I think in the very early stages they're probably about 1 to 2 million passengers only. So their growth has just been tremendous. Okay, by the way, none of this is really investment advice. Okay, I just want to just highlight to you what are leading indicators that I hope that will make you a more informed more informed investor. Now, the second one I'll talk about is that if you think about airlines like Asia that have grown leaps and bounds in terms of their passenger growth, this is one thing you can't avoid. It's quite simple, right? Airports. You need an airport to catch an airplane. And you need an airport to land your plane, right? So airport services, of course, in Malaysia Airports Holding Berhad, that's also listed. They also publish their number of passengers carried every single month. Okay. Now, what I've done is I've actually analyzed it and I've showed you on a price on a chart what the number of passengers that they carry since 2003. Okay. You can get all these numbers. It's all public information. You can see that it went from 2000 in 2003 is about slightly about 30 plus million. Today we're looking at about 130, 140 million passengers. Okay, so I'm going to plot this against their price chart that just give you an idea what it looks like. So this was back to 2003. If you look at them, they had 33 million passengers. Up to here was 2007, 45 million passengers. Of course, 2008, 2009, that declined because there was a recession. Subsequently, if you look at this jump leaps and bounds from 45 to 80 million passengers. Okay. I would say thanks to AirAsia. Okay. So because their business model is slightly different. No, not so much fuel costs or anything else. This is infrastructure, licensing, and labor, right? And every time you have to fly, whichever airline you fly, it doesn't matter. As long as you use an airport, you have to pay a tax, right? So their growth is based on per passenger. So the higher number of passengers, the more revenue they're gonna make, right? This was when KLIA opened. Now this is quite interesting because KLIA 2 opened 1st of May 2014. But before that, their share price already went way ahead of the opening. Okay. Subsequently, you saw that decline, right? So sometimes share prices can move far ahead of what this actually is, right? So if you look at this, 79 million passengers to 2015, 1 year later to 106 million passengers. That's 20 million passengers extra a year, almost 2 million passengers a month. Okay, that is quite substantial. And of course, subsequently, it goes up to 133 million. I think now we're probably about 140 million for 2019. Okay, what is your guess for 2020? That is I mean, maybe I put it out there as a poll, right? What do you think your guess is for 2020? Yeah, okay, for those of you out there. Okay, so that's I'm going to show you another one, which is something that is also what I call a leading indicator. It's so if you look at if this look at this Malaysian Airport Holdings Berhad, if you look at them, they were 1.8 billion in 2010, their revenue. Their 2019 numbers was 5.2 billion. Okay, just to give you an idea. Okay, now profitability was always question mark. Okay, I've talked about revenue. So that's where you need to look at management, how prudent they are, and all that, right? So even though their revenue grew 2.8 times, their net profit only grew 1.8 times. Okay, so it's how efficiently they run. Okay, but nonetheless, very much a monopoly in the whole of Malaysia. They own almost all airports in Malaysia, I think, except for one or two. Even that, they have a big stake in it. Yeah, even domestic airports. Okay, just to give you guys an idea. Okay, so let's not talk about airplanes or passengers because I'm talking about leading indicators. Now let's talk about our trusty old stock exchange, Bursa Malaysia. Okay. So when I was doing this topic, I was trying to figure out what is easy for everyone to look at, right? What is easy? Now, if you look at this, how does a stock exchange make money, right? Stock exchange, so Bursa Malaysia happens to be listed. Even there are other listed exchanges in their own exchanges as well, right? How do stock exchanges make money? The more volume people trade, because on every trade on a value, they get a percentage as well. So the more volume or the number of volume, the average daily volume that increases, that will also increase their revenue. Okay. Now, if you look at a stock exchange pretty much in terms of there's no incremental cost of sales for every one person that trades more. Okay. So if you trade $10 or $20, it doesn't cost the stock exchange any more money. So it's really almost above their fixed cost, their business model. Anything above goes straight down to their net profit number. Okay, because it's a just purely salaries and operating expenditure. So one of the things that you want to look at in a stock exchange, if you're analyzing them as a business, and they are also very, very transparent. Not only, just like I said, MHB does monthly, you can actually get every day what is their trading volume. Okay. And you can actually download it directly from Bursa Malaysia. So I just give you an idea. This is a snapshot of what they have. You can see in if I put it here, because this was a cutout from a very big Excel file. This was April. April was 52 billion average daily volume. May 2019 was 44 billion, and so I'm just trying to look at this. Sorry, this is 2020. I stand mistaken. Let me change the dates here. Okay, this should be 2020, I believe. Okay, this is. Oh no, sorry. It's right. This is correct. So this is sorry. This is April, May, June, 2019. Correct. Okay.
Right.
Average daily volume per month, right? So based on number of trading days, so got 52 billion, 44, 8 billion. Okay. This is the latest number today, and I did it just for the same time period as well. So if you look at 52 versus 58 billion this month, 44 last year versus 70 billion this year. So you can see there's a huge jump because everyone suddenly is interested in stocks, right? And then from 8 billion in the same time period last year is 43 billion. So you can see how many more times it's gone up, right? So actually I did a very simple table to give you guys an idea what I mean. If you look at January, February, March, this was last year. This was what volume they were doing. 2020, this is the kind of volume they're doing, right? So you can see the growth, year-on-year growth. This is April, May, and June. Okay, now this is for the full month of June. And since we are not even halfway through June, this is already exceeded the full month last year. It's really up 23%. So what would your guess be on this company's revenue and net profit next month, for second quarter, right? So that's something. So I call these leading indicators because these numbers will come before the accounting numbers, right? So just to give you guys an idea, on their first quarter, there was growth in the 2 months, and if you look at the growth in the 2 months, you're looking at revenue growth if 19.15% and a net profit growth 38.15%, and all this is because of a volume increase of 14.1%. Right, so their total volume in the first quarter grew 14%, but their revenue grew 19% and their net profit grew 38% Q on Q. Okay, so I just want to give you guys an idea or flavor of what we mean by being a data-driven investor, because there is a lot of information out there. You just need to take the time to go and try and connect the dots together, right? And these are a few examples I've shared with you. I've given you even more here. You can have go look at some, like if you're looking at the palm oil plantation, you want to look at fresh fruit bunches. If you're looking at telecommunications, they commonly use this thing called ARPU, average revenue per user. If you talk about manufacturing, you want to look at the capacity growth in the lines that they are growing, right? What's the capacity that they're growing? If you look at automotive, it could be total passengers cars sold. Of course, if you look at total hard disks, you can also look for some of these numbers are actually available free that are online. Okay, but what you need to do is actually start to connect the dots. All right, so this is my last slide for today. I just want to give you guys a flavor of what we mean by being a data-driven investor. All right.
All right, guys, awesome. So I hope that you are able to at least have an overview of what information which are data driven, right? Because whatever information that we share here are all publicly available. They are all being published. It is not, it's not from a grapevine. It's not from an internet, chat group or whatsoever, right? These are all real data, right? It's quite interesting because whatever that we mentioned here today, remember the examples, the samples that we have here today is for informational purposes, right? But bear in mind, this is basically, I mean, we just want to basically open up your minds and really look at, this data, business metrics like Elvin has mentioned, look at economic data for long-term views, look for price or timing, look for fundamentals of company to see whether the company is able to sustain and grow together with the economy, right? So all of this information, if you put them together, then you get a really valuable information for investment. All right. So, guy, before we go on the next one, you can ask your questions because right now we are in a Q&A session. All right. So you can ask any questions until the time. I think we probably have about another 10 minutes, right?
Yeah.
Okay. Let me see. Okay, I'm just going to show you. Going to go back to economics data, economics topic again. You have a question from Aswin. The Fed mentioned that they will maintain rates till 2022. You think BNM will reduce rates further?
I'm not from Bank Negara Malaysia. I also don't sit on the monetary policy committee. So actually, even if I do, I cannot say anything, right? I don't know. I think it's anyone's guess. One of my predictions last year was that the interest rates have to go down. Looking at the sluggish economy, but I think COVID sort of just accelerated it dramatically. I don't know, because if Malaysia keeps their interest rates way too low, we may have an issue with foreign exchange. Okay, so I'm not sure, but I think they won't increase it until the economy recovers. So the Fed has given guidance. Unfortunately, our central bank here has not given guidance.
Yeah, I think it's best asked to an economist lah. Because I mean, Bank Negara is there to maintain that balance in the economy lah, so they don't just simply go and raise and reduce interest rate. Because whenever they do that, they actually have an impact in the economy. So yeah, it's anyone's guess lah, because only they know lah.
Yeah. Maybe they also don't know.
Try first and see.
They review it at quarterly.
Yeah, I think they try to reduce and then they will look at what happened, what's the impact like, and then they'll try to readjust again. Yeah.
I think it will be surprising if they reduce it another round. That would be a surprise. Yeah. Okay.
Okay. Okay, there's a question here by Aaron. Asia can use what method? Go long by silang all in ones, or use go short-term technical buy up and down? This is a very typical question that we also have every time we run a seminar or a workshop as well, right?
Yeah.
You want to attempt to answer this?
We cannot give investment advice, And on top of that, this event is by Bursa Malaysia, so I think you need to choose a method that you're comfortable with.
Yeah, that's why we are having these sessions basically after you go through all the whole sessions, because it's not just about picking the right stocks, right? It's how you manage your portfolio, how you manage your money, and so on and so forth, right? So the word silang, which is one thing that we never use
Yeah.
Silang means
it's either it means all in. All in.
Silang means all in, right? It's either you make it or break it. That's too risky. Okay, there's a question from Yin Xiaoming. Integrated circuits represent 20% of Malaysia export. Does the main attribution comes from MNC investing in Malaysia, which is foreign direct investment, right? And subsequently exporting the ICs.
Yeah. It's a combination of So there is a local ecosystem. We are also part of a global ecosystem as well. So, for example, if we're doing what they call very common outsource service assembly and test, is that the parts come into Malaysia, they added value, and then they get pushed out again. Yeah. So yes, it is common to see that. Yeah. Of course, you have to go deeper into the industry lah, as in what constitute what, right? But generally, you're right. So there's an in and then there's an out as well.
Okay, so there's one question here on basically price charts. Basically asking me, would I consider turnover rate as one of the factors in the chart analysis? If yes, what is the percentage we need to consider? Now, I guess you're referring to a reversal percentage, right? How many percent that the stock have to reverse before that trend turns? Well, it depends, right? Because I don't use a fixed percentage, because a 1 ringgit, if let's say for example, if you put a 10% rate, right? A 1 ringgit stock, 10 cents is the reversal if it's 10%. If it's 10 ringgit, then it's 1 ringgit reversal. So I mean, every stock has different characteristics. So I don't use percentage, but I look at patterns on the chart. All right. So again, we will cover this as we go on in the sessions in the next few weeks. All right. Okay, let's go to the next question. Okay, there's a question here from Tan Seong Kok. There is a disconnect between business metrics and share price. Although load factor and passenger increased, but share price down since 2018.
I guess you're talking about Asia, right?
I guess so.
Very obviously, why share prices are down since 2018, because planes have not been allowed to fly until I think 5 days ago. So globally, airlines are massively affected by COVID-19. So I don't believe that their business metrics will look that good anyway, because if your planes are grounded, you can't have any passengers, right? So I guess when you look at this, you need to look at the global, you need to look at the longer term picture and outlook. Will people still continue to fly low cost? Before you talk about flying low cost, will people continue to fly? That is the big question. My take is that people will still have to fly eventually. I know very recently, I think I heard that to fly now, they put you in a hazmat suit, the blue color thing that covers your what. You gotta wear goggles, you gotta wear face masks. Everyone has to suit up in like a hazmat suit before you can jump on the plane. You know what? If people are comfortable with that and it makes them feel safe, I don't know how they can bring back those numbers, but I think people will still have to fly for holidays lah, right? But maybe business travel may be cut short, maybe.
All right. Okay, there's a question here by TH Go. Will there be a second bottom? Okay, we have covered this actually in our previous sessions. If you have time, please do look at our videos, especially our recorded videos on our Facebook, right? We have actually have this on a daily session, but do take a look at the Sunday session where we normally have a Ask Anything session. So that's where we normally do a market updates and all that. All right, so that's for TH Go. Now let's go on to the next question. Let me see here. Now there's one question here by Wong Hongji. Can we use PEG as a tool to find undervalued companies?
You can, but your E is still lagging, right? So that's why your leading is still more important. I mean, you must use leading with lagging. Yeah, so I hope that answers your question. Your E is earnings, right?
Yeah. Okay, next one, Tan Seong Kok. EPF records 12.2 billion gross investment income for first quarter 20 versus 9.7 billion in first quarter 19. How does it reflect in the equity market?
What do you mean by reflect? As in
maybe effect. I don't know. Maybe effect. How does it?
Look, I mean, it's no secret that EPF. So as a member myself, EPF member as well, all of us contribute to EPF, and it's no secret that they are one of the largest shareholders in the domestic stock market, right? So they are. I'm not sure what you mean by how it affects the equity market. I haven't gone through what you mean by where the segmentization of the income has come through. But I know I can't comment so much unless I know the details of where that extra, or what's the revenue coming from the 12.2 billion.
Yeah, because not all the investments are in equity markets, right? There are other markets, other asset classes as well.
Yeah. Fixed income, bonds, real estate. Now they are slightly a little bit overseas as well. So you sort of got to look at the breakdown.
Okay. Since you're bringing up the sample earlier, the case study on Bursa, right? The question is Bursa volume sustainable going forward? What leading indicator can be exploited?
So if you see the lines, people lining up to 40 Toto and driving up to a hill in Pahang, then that will be your leading indicator that maybe volumes might drop. If you look at the volumes that have been created, Bursa also actually is quite transparent. They show you whether it's retail market, institutional market, or foreign institutional or local institutional. I can say this run up largely due to retail investors like you and I. Everybody want to jump in the stock market and invest like it's 1997, right? I've not seen this in a long time. This mad rush. If you can go and Google the number of account openings, right, during MCO when everyone's at home, don't know what to do. Hey, let me go and buy some shares, right? It has been astronomical. So that's also another leading indicator. The total number of accounts that have been opened. You can go and Google that as well. That's all available online. Whether it's sustainable, it's a very good question. I don't think there is a leading indicator for that lah. But if you look at the daily volume, what you want to do is you want to track the daily volume to see whether the numbers are falling or not. Yeah, so that will give you an idea as well.
Yeah, that's a good thing because Bursa publishes every day, right? So you go to BursaMalaysia.com, you can actually get those information there, right? You go to market information, that's where you can see the trading volume. They're very, very transparent about it. All right.
Yeah.
Okay, there's another question here. There's a question from Rasmavi. How do you get an ET t-shirt?
How to get ET t-shirt? Contact us. Contact us. I'm sure we can hook you up with something.
Okay, another question from Tan Seong Kok. For semiconductor, what type of monthly or quarterly data that is available?
Actually, semiconductor is very big. Very big. So you can actually go into segmental. I know there are a couple of publications where you have to subscribe to get some of this data. You can. I can't remember off the top of my head, but you can actually Google them. Some of them are paying one. You have to pay to get the data because they're like a consortium with all the big semiconductor guys. They sort of do a survey. I think for hard disk, I think it's IDC, right? So it's gonna do a bit of googling, you'll get it. Yeah, but not all of them is free or publicly available. All right. You could also go to their investor relations page. If you're talking about the end user, so whoever is the end user, if they're listed and they actually publish this data, you can also get that data there as well. But it's work lah because you have to collate that data. Yeah.
Okay. Okay. So for those who do not know, eForce is XLForce end-to-end connect is the one that provides the trading systems for brokers, right? So whenever you buy and sell and all that, these are system provided by them. So since trading volume is high, do you think that XLForce and end-to-end may benefit from this high volume?
Depending on the contracts that they write with the brokers, I know they are a very large part of most of brokers actually use their platforms. Depends how they write their contract with the brokers. That's very important. But generally, the answer is yes. Higher trading volumes. If they get a percentage or a small amount on each trade that's being executed on their platform. Now, by the way, the trading volume that's gone up, you got to understand only if it goes through the XLForce and end-to-end platform do they actually make more money. If it's, let's say, with a Remisier or something and there's no breakdown of that, that may not go through their platform, so they may not be. But I think by and large, generally, if retail has gone up and they do internet trading and they use their services, it is possible that their revenues and profits may go up as well.
Okay, this is from Chew YT. So the sales volume metrics and industry metrics are available in Bursa website or annual report of a particular company.
Well, Bursa has not made it mandatory for all companies to disclose this number. It is mandatory for them to disclose all their financial accounting number. Not all companies have it, so you actually need to do some digging around actually to get some of these numbers.
Okay, maybe we have time for two more questions. We'll wrap up with last question, a short one, but we have one question here. Okay, Jason Kok, you're asking about opinion towards investing in ETF. Next week, we're going to have a session on this, so make sure you tune in next week. All right. Okay, one more last question here. Alvin, may I know, instead of the negative GDP, any other data do we need to refer to determine real bear or fake bear? Now we have kangaroo also, right?
Fake bag, bull, and kangaroo is all right. Um, understand this, right? GDP is also a lagging indicator, right? For example, our first quarter GDP for 2020 was actually positive, right? It was up by 0.8% or something like that. But I can almost guarantee that second quarter GDP will be much lower than last year because everything is shut down. Everything is shut down, right? I mean, we were the whole of April, no, very little business can be conducted. Okay, so we already know that and it's past, right? So that number will probably only come out in July or August, right? When we talk about second quarter, so it is very much a lagging indicator, right? So you can use it as a general trend, but if you want to use it in a very short term to sort of figure out, you see this only after the market is starting to recover. Only much later you're going to see in the GDP numbers, right? And you want to be ahead of the game. You still need to use your leading indicators. The GDP is to give you that long-term trend. That's why in my first slide I talk about longer-term trend, right? It's very dangerous to use it for short-term. Yeah.
All right. So I think that will wrap up today's session. All right. And remember, I'm going to share with you how you can download the slides today. Alvin, can we go to the next one?
Yep.
Next
Stay with us. Still got one more here. Yeah.
More
Okay.
announcements. Right, so this is where you can download today's slides, right? We only can download today's slide after completing evaluation or feedback form. This is to know whether, this session is beneficial for you guys. Just fill up the evaluation form, and you have any feedback, either to Equity Tracker, which are the organizer of these events, or to Bursa Malaysia, you can also put in a feedback comment. There's actually a feedback section there for you to fill it up, all right? So please, immediately once you have sent the evaluation form, an email will be sent to you to show you where you can actually download the slides. All right. So please, it's also tagged on our screen right now in the comment section. If you don't have the link there, just click on the link. You'll go to a Google form. Then that's where you answer just a few questions before you go to the slides. All right. So I hope that each and every one of you are able to give a evaluation or feedback, because we need your feedback as well, and Bursa needs your feedback to see whether this is workable. All right. So next one is. Can you go to the next slide, Alvin?
Yep. So please, guys, go to that link to give us evaluation whether you don't like this session. Bursa would like to collect that information and to see whether we're back on for next month, I guess. Right.
All right, and then the next thing is Bursa Malaysia has actually started a new platform for you guys, for investors especially. They call it Bursa Academy. Okay, it is available on BursaMarketplace.com. So the website is there. It's bursaacademy.bursamarketplace.com, and this is where you get. It is actually an e-learning platform, right? You'll see all the videos that we have a sessions here. It will be uploaded there, and there are many other e-learning tools as well. All right, so just log on to bursaacademy.bursamarketplace.com. Okay, if you forget this one, the website, you download the slides, and the slides will be showing this address as well. All right, so I hope that you continue to support us, and please make sure that bring your friends into our next sessions on Saturdays, because we have, like I said earlier, we have 10 English sessions coming up in the next 10 weeks. All right, so this will be an educational, like what we have gone through today. So today is just an overview. And the following sessions, we're going to have more details. All right. So please share this with your friends. It is free. It's provided and brought to you by Bursa Malaysia. All right. So guys, thank you very much for joining us. And we'll see you again in our session next week. And next Tuesday, we actually have a Mandarin session, right? Which is also brought to you by Bursa Malaysia. It's also an e-learning session, and we're going to have 8 sessions on Tuesdays. That's for those who are Mandarin speaking. All right.
Yeah.
Okay. So, Alvin, anything else to say before we?
That's it. Don't forget to fill in the survey. We'd like to know how you guys feel about this session. All right.
Yes.
Like I mentioned, it's all brand new material. So I hope those who have been listening and joining into us, you actually got something out from it.
All right. Awesome. Thank you very much, and have a good evening. And we'll see you again.
Thank you, guys. Bye-bye. Let me